Indeed, a tarrified world saw some relief in the ongoing trade war as Trump announced a 90-day tariff pause with levels brought down to a universal 10% tariff as negotiations go on. A carrot only for those who chose to negotiate. That respite, however, does not apply to China, which will see US tariffs on its goods rise to 125%, a stick for China for daring to raise its tariffs on the US to 84% in retaliation. Yesterday, Trump also signed several executive orders focused on deregulating markets, including one aimed at ensuring federal regulations do not block entrants from entering new markets. Hello and welcome to Global Business Insights, where we bring you more depth on the latest business headlines. Today we replay two previous clips featuring Juliet Anammah, CEO founder CG&R Strategy, on what companies could do as they cope with very unusual uncertainty, and another replay on the different era of dissatisfaction that we are in. But first, some of the headlines. In Nigeria, the central bank announced a balance of payments surplus of $6.83 billion for financial year 2024. This was a remarkable turnaround from deficits of $3.34 billion in 2023 and $3.32 billion in 2022. It also reflects the impact of wide-ranging macroeconomic reforms, stronger trade performance, and investor confidence. Wall Street saw a historic surge after the US administration paused tariffs, closing on a strongly positive note. Nasdaq spiked up over 12%. The latest pause suggests to markets that the goal is tariff negotiation and hopefully ultimate tariff reduction. It also shows the administration has one tariff track for the rest of the world and a different one for China. Oil prices also bounced back as risk appetite returned to markets. Brent crude up over 4% yesterday after the pause. Delta shares were up yesterday, though down 40% year to date as the airlines beat earnings expectations for the first quarter in 2025, but revised its guidance for the current quarter to a lower range. In an unusual move, which may soon become the norm for others reporting on Q1, it pulled its guidance for the year due to the broad uncertainty and lack of economic clarity, making it difficult to give an updated full-year outlook. Delta also warned that it would defer deliveries of new aircraft if hit with tariffs on products from Europe. Also, Walmart at its Investor Day warned of tariffs hurting profits after it walked back its first quarter operating profit growth guidance. This morning, we got data from Egypt showing the annual urban consumer price inflation rose more than expected to 13.6% in March from 12.8%. Monthly CPI increased by 1.6% in March, the most in 6 months, accelerating from a 1.5% gain in February.
How do you manage a business in a time of high uncertainty? The first one, remember the words from the US Secretary of Defense during George W. Bush's time, Donald Rumsfeld. Rumsfeld said, there are things that we know. Those are known knowns. There are things that we know we don't know. Those are known unknowns. And then there are things that we don't even know that we don't know. I think a period of high uncertainty certainly forces a business to reconsider what it knows and what it doesn't know. And then armed with that very frank admission of what the company knows and what it doesn't know, then it can go into really running multiple scenarios, stress testing its strategy and its execution. Hardly any well-run company has ever gone down because of high uncertainty. It's always related to the strategy and execution. There is a US-based company, it's retail, it's clothing, and it manufactures in China. Now, since April 2nd, what does the company now know? it knows clearly that compounded tariffs will mean that the company's products being shipped from China will attract 54% in tariffs. That's known. It also knows that it cannot ship small packages because the de minimis threshold no longer exists. Thirdly, it also knows that it cannot really pass tariffs, the cost of those tariffs directly to the consumer. There's going to be price sensitivity. So those things are clearly known. Some of the things that it will classify as known unknowns, for example, will be it would want to, a company like that will want to start establishing new sites for manufacturing. But where? It's not clear. Vietnam, Cambodia, out of the question. Does it now start to consider countries in Africa, countries in Latin America, taking advantage of the lower tariffs there? Possible, but what about consistency of supply if they are not yet tested? What about getting those products at the same quality in terms of what it's been getting from China? So those are known things it can do, but a lot of unknowns in terms of what the possibilities are. And then you have a different bucket. That's the last bucket, which are the unknown unknowns. For example, the company will probably start to say, are there certain raw materials out there that if we use them to manufacture our products, our clothing, we could actually reduce the cost of production to a point that we totally eliminate the negative impact of the tariffs? Unknown. What if the company takes the next 4 to 6 months and completely shifts its manufacturing base to, let's say, El Salvador in Central America, and Trump unwinds the whole thing after like seven months? That, again, is very much unknown. But if you look at everything, the examples I've given on this particular issue of tariff uncertainty around tariffs, all the changes that a company is going to make, everything to do with strategy and execution, is all happening around a very narrow scope of areas. So consumer price sensitivity is one, supply chain is another one, logistics is another one, possibly product design could be another one. Okay. So that brings me to my second point. High uncertainty typically generates a high velocity and frequency of discussions and anxiety and thoughts and actions. So much so that you end up in a situation where the shadow of the dragon becomes much more dangerous than the real dragon itself. So the second thing I wanted to touch on is it's important during a time of high uncertainty like this to ring fence the parts of the business that are not going to change. Marketing isn't going to change drastically overnight because of tariffs. Neither is customer service going to change. Neither is human resources, legal. There are lots of parts of the business that will not change. So ring fence those and make sure that people are just doing their job and they're insulated from the high velocity of discussions, and rightly so. A lot of discussions and a lot of thoughts and actions we go into figuring out about consumer price sensitivity, figuring out about what new manufacturing sites, figuring out about logistics, shipment, what's the cost going to be relative to tariffs. All those things will have to change. So that's the second thing. The third component that I will touch on is be flexible around governance, in the sense that it might just be that you would have to have a short executive committee that really looks at geopolitics at a time like this. And you gather people based on knowledge, based on experiences as is needed. So it's not a standing executive committee. It just happens to be an executive committee that you constitute for this period. And it does its work and use it as a sounding board for all the actions and all the decisions that needs to be made. And that's it.
The world's largest economy has in recent times seen a seismic shift, political shift that has puzzled many. The declining support for the Democratic Party among working class voters that led to Trump 2.0 reflected a deep disenchantment with an economic system that, if the truth be told, under both parties concentrated wealth at the very top, enabled the growth of the financial sector and global stock markets at the expense of the rest of the economy, trapped people and countries in inescapable cycles of debt, and deprioritized the well-being of billions of not just Americans but people all over the world. In other parts of the world, like in Europe and the UK, high inflation driven by supply factors played out as COVID and a war in Ukraine complicated supply scenarios, drained wallets, and intensified the discontent. In Africa, the promise of stable democracies in the large economic hubs of South Africa, Nigeria, Kenya, and so on has not led to the broad economic well-being many had expected. The political evolution, some say, need time to play out and mature. Others say it is not delivering the vision simply because it cannot. In the US, Trump's grand new experiment that has been extensively derided by the best of minds as reckless comes at a time of deep hunger for a different path, which should start with admitting that the old order was not working for the majority. If you study how change works, there are two issues. First, the demand aspects of change, and the other is the issue of supply. Where the demand and hunger for change way exceeds the supply of a new appropriate course of action, the gap can lead to deeper dissatisfaction, but also patience with methods and ways that are odd, but many hope will lead to a new direction and mature into something better. The elephant in the room is that those who have opposed Trumpism are still weak on alternative proposals and still blind to the dissatisfaction that birthed a different movement. It is a good thing that Europe has woken up on the need to be more competitive, to spend more to defend itself, and be less reliant on a wealthier cousin across the ocean. They have Trumpism to thank for being dropped from the cozy nest and allowed to fly on wings they already had. For Africa, analysts are also right in saying the tariff blitz doing what years of diplomacy haven't, and that is to push African nations to double down on their stalled free trade pact. It could serve as a long overdue wake-up call for the continent to speed up efforts toward deeper intra-African trade under the African Continental Free Trade Area Pact. While new tariffs are playing out and markets are gyrating and more complain about this and that, I see the vacuum in alternative visions that admit the failings of the past, but also alternatives that are compelling to show that the past and today's corrections are unlikely to lead to that golden era. Today's actions could be good in that they are distant from an old order and erase old paradigms of the past, like aid to Africa enmeshed in corruption, or an imperfect free trade myth where trade was never really free and was biased to serve some better, or a China rising amid totalitarianism and state-led dictatorial foundations, or Africa hopping one step forward and sometimes many steps backward. Also, saying no to the past and dissatisfaction with the status quo could make it easier for better solutions and better ideas to emerge. However, burning Teslas is a stupid response, and the toxic rhetoric to demonize and pray the new US administration fails is infantile and does not move any needle. Asking to pause Trump's orders will also most likely not be heard. And this especially if we do not accept that the old order was not working for many people, many less advantaged on Main Street and many other forgotten streets. Don't expect any sympathy for Wall Street from Main Street when it stumbles occasionally amid its apparently resilient multi-year unassailable ascent. We are in an era of dissatisfaction, still awaiting a new vision, and we are not talking of left or right. We are not talking of a vision that will not disturb Wall Street and the money machine of today's billionaires who milk it. Asia Pacific markets rose, tracking the euphoria in Wall Street after Trump announced a 90-day pause on higher tariffs on nations apart from China. Well, that's it for us on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosani. Bye-bye.